So I think we're going to see a slowing economy, and probably by the end of this year or beginning of next year, a recession. But we're going to see that before inflation has come down sufficiently.
So, Adrian, the economy is in shambles, and mainstream economists only identify things when they are way too late. How long do you think it'll take for these economists to come out and say officially we are in a recession?
Well, in the US, there is an official definition of a recession, which is 2 back-to-back quarters of negative GDP growth. We've already had one, of course, in the first quarter was negative growth. Everybody was making excuses for that as to why it didn't really count. But so there's an official definition. I mean, I think your point or broader point is more that not so much on calling recessions, but the fact that economists, official economists particularly, seem to always be wrong. Right now, when you see what's happening in the US, as I say, we had a negative GDP quarter, which is pretty astonishing when you think of it. Coming out of COVID, with everything opening up, everybody thought, the predictions 6 months ago were that we'd had a very strong GDP growth, right, because of the comparison. But what's astonishing to me is how few economists, particularly official economists, I mean, the Fed has over 400 PhDs in economics on its staff, 400, and they still fail to get stuff right. I shouldn't say they still fail. Maybe I should say because they have so many academic economists, they get things wrong. However smart they are, or however much they know economic theory, they don't have any experience of how businesses, any practical experience of how businesses react to raising interest rates or lowering interest rates or withdrawing liquidity from the economy. I mean, too many economists, too many official economists, I should say, particularly on the left, seem to see the economy as a set of different factors and different inputs, and they think you can change something here. They don't seem to realize that every time you change one thing, people react to those changes, and it changes everything else.
Is it the Fed's competence, or do they leave everything too late, or will they pivot? What's your opinion on that?
Well, that's an excellent question. This Fed in particular, under Powell, but also under Yellen and under Bernanke, kept telling us how they were data dependent. We're data dependent. We look at the data, we make decisions based on data, which sounds logical.
Right.
But think about it. Data by its nature is backward, is too late. So the Fed, you don't want a Fed that's always guessing what the future is, but this Fed is focused on what's already happened. By its policy, by the way they do things, they are inevitably too late.
Right.
Yeah.
In the likely economic scenario, what investments will do well and what won't do well in your eyes?
Well, my base case is for a stagflation. Now, I think that's not exactly baked in the cake, but pretty close. But some people will disagree with that.
Yeah.
But I mean, I think we're going to see a situation where the US economy is slowing. It's already slowing. I mentioned savings rate, credit card debt is another thing. The largest ever monthly increase in credit card debt last month.
Wow.
So, and that's a reflection of higher prices, of course. People don't have the increased money to maintain the same volume of purchases. So I think we're going to see a slowing economy, and probably by the end of this year or beginning of next year, a recession. but we're going to see that before inflation has come down sufficiently. In other words, a stagflation. What you see is there's a pattern, and oil and gold are the number 1 and 2 investments in the 20% range,
Right.
returns, and that's well above everything else. After that, you get other commodities. Broadly, most commodities do well. You get smaller markets, developing markets. Stocks tend to do well, and the things that do badly are developed market stocks, US bonds.
Do you think because Warren Buffett just did a huge purchase into Occidental Petroleum and Chevron, do you think he sees stagflation coming, just like what you're talking about?
Well, I can't speak for him, of course.
Yeah.
I think that's right. And if you look at, no, that's probably true. But if you look at oil, even if we don't have a stagflationary period, oil is looking remarkably, I was going to say strong from the point of view of anticipating higher prices. I mean, we're simply not, Russia's really only a small part of that, the Russian invasion and sanctions, only a small part of that, frankly. You know, you look around the world and where is the spare capacity? Despite the fact that oil prices have doubled this year, you're to be expecting more investment activity, more exploration activity, and a boost in production. You look at OPEC, which notoriously over its history has been very ill-disciplined. They set these targets, but they never seem to comply. You know, they set the targets to try to reduce production to boost the price, right? But they never seem to stay with that discipline. You look at the last 6 months, not a single country in OPEC has broken out, has produced above. It's not a single one has produced above its target. And in fact, as a group, they've had several months where they haven't even produced to their quota.
Wow.
Which, given where the price is, says to me, A, Saudi Arabia doesn't like Biden. We know that. But the broader point it says is that they don't have the capacity to increase production. So that's OPEC. The US has increased production, but it's been almost exclusively DUPs, developed wells that have been dug but have not yet been produced.
So gas just this week hit $8 per gallon in California, and it's literally higher gas than minimum wages in California. So how long can this sustain? Can it go another year before, like, how, in your opinion, how crazy is it?
The oil price? Yeah, it's an interesting point you make, because this is the highest ratio of gasoline to minimum wage since 2008, which lasted a couple of weeks. So other than that, it's the highest ratio of gas prices to minimum wage that we've ever seen. And at the same time, you've got people, again, lower middle class people and working class people. You've got people canceling their airline trips and saying, look, we can't afford to get on a plane. Let's take a driving trip instead.
Right.
And those driving trips are going to be pretty short because of the price of gas. I think this could last a little while. Now, obviously, if we get a solution, let's say, to the Ukraine-Russia, and sanctions on oil and gas are lifted quickly, which I would think would happen because the West needs Russian oil, so they will use any sort of, I won't say excuse, but that they will be biting at the bit.
Right.
to lift those sanctions, that will bring some oil back. I mean, most of the oil, a point I made last time on this program, I think, is that the things that Russia produces have not gone away. They've not been destroyed. You know, it's still producing oil and gas and nickel and palladium. And those products are, instead of being sold to the West and to the United States, they're being sold to China primarily, but also to, you know, the Middle East and some African countries. And that's displaced what those countries would otherwise have bought, for the most part. So the palladium has gone to China. What China would have bought from South Africa is now on the market to be sold somewhere else. So it's just displacement. That's different for the case of oil and gas, of course, because you know, in the case of gas, you need to liquefy it. You need these huge ships to transport it, and then you need the deliquification facilities at the other end. So we are seeing, on a global basis, we're definitely seeing oil and particularly gas, a shrinkage of what's available on the market. So if the hostilities end, that will see an increase come back to Western Europe pretty quickly. But I think that's only a temporary respite, frankly. You know, we're simply not producing enough. It's a much broader issue, of course. It's this whole ESG thing where we want to replace fossil fuels with windmills and solar. When the world went from wood to coal, there was an economic reason to stop burning wood and start burning coal. And when we went from coal to oil, there was an economic reason to stop burning so much coal and start burning oil. There is no economic reason to stop burning fossil fuels
and move to solar.
And the problem is that we as a world, we have reduced the supply of fossil fuels before we have reduced the demand for fossil fuels. And we're years away, in my view, we're years away from being reliant, from having replacements in you know, windmills and solar.